Welcome to the legislative update for the week ending Friday, April 9th. My name is Sara Simkins, and I am an Employer Services Specialist at Savoy. This week, we are continuing our discussion on the American Rescue Plan Act, otherwise known as ARPA. However, we are going to focus on the regulatory side of the premium assistance provisions as we go through some of the newly released clarification from the Department of Labor. We know the major news this week was the Department of Labor releasing their new Cobra notices reflecting the ARPA subsidy information. But before I get into that, I want to make sure that we all have an understanding of who is eligible for the subsidy in the first place. So, how do we know when someone is an assistance eligible individual, or AEI? The subsidy is available to those who are eligible for Cobra or state continuation, but it's not quite that simple. First, only those who were involuntarily terminated or had a reduction in hours would be eligible for the subsidy. Those who were voluntarily terminated, were terminated due to gross misconduct, or aged out of the plan would not be eligible. In addition, the subsidy is only available for those who are not eligible for another group health plan or Medicare. This includes eligibility for a spouse plan as well. An individual may be eligible for the subsidy if they are currently covered through a government exchange or Medicaid. However, if they elect the subsidy, they will lose any applicable premium tax credit that they may be receiving on the marketplace. Individuals must notify their employer if they become ineligible for the subsidy, or they will incur a penalty of $250 per day, or 110% of the premium if the failure is fraudulent. So now that we've talked about who is eligible for the subsidy, what does this actually mean for federal Cobra participants and state continuation participants? For federal Cobra, the subsidy applies to those who are currently on Cobra and those who are newly eligible during the subsidy period. And there's a special provision which allows those who previously waived or lapsed coverage to prospectively re-enroll in coverage effective April 1st of 2021 for the remainder of their normal 18-month Cobra timeframe. So that means whatever amount of time would have been left from their qualifying event date had they continued coverage. As an aside, I see a lot of employees asking about the situation where only some of the employees' family members elected federal Cobra when it was first offered, but all of the original family members were eligible for Cobra when it was first at the qualifying event date. They want to know now if these Cobra eligible members can re-enroll prospectively, and the answer is yes. This subsidy period does apply to them. Things are a little bit different on the state level. For state continuation, the subsidy is only available for those who are currently on state continuation or are newly eligible. There's no second chance to elect when you have state continuation. For both federal and state, those who are eligible for the subsidy will not have to make any Cobra payments during the subsidy period. They will receive a notice from their employer which outlines this information as well, but the subsidy covers 100% of the cost of Cobra as well as the 2% administration fee whenever it's applicable. I also want to note that both for federal and state Cobra, the subsidy provisions do not extend your normal Cobra timeline. You will only be subject to the normal amount of coverage that you would have received. You don't get any extra coverage. The subsidy applies to coverage received from April 1st of 2021 through September 30th of 2021 under a group health plan. So on the federal level, this includes medical, dental, vision, and HRA coverage. But on the state level, this only includes group medical coverage. So now on to the meat of the matter. As I mentioned at the top of the podcast, the Department of Labor just released updated model notices, and employers are required to send model notices to impacted and qualified beneficiaries. The Department of Labor just released these notices last week. So while plan sponsors are not legally required to use the Department of Labor's notices, it is a generally accepted best practice, particularly considering the recent class action litigation related to the Cobra notices. So using the model notices truly is the safe bet. If the employer still wishes to use their own notices anyway, the notices must include all of the required components as listed by the Department of Labor. But assuming the employer wants to use the model notices provided by the Department of Labor, there were actually 6 notices that were released, and I'm going to touch on each one of these briefly. So we're going to start with the first of these, the Summary of Cobra Premium Assistance Provisions. This is a one-page summary of the subsidy that is to be provided along with the second notice, the Request for Treatment as an Assistance-Eligible Individual form. The subsidy and form are intended to be included with the election notices. The third notice is the notice in connection with the extended election period. This is a new special notice that employers must send to any individuals who experienced a Cobra event due to an involuntary termination or reduction in hours and are still within their maximum coverage period. This notice informs these individuals of their right for a second chance at electing Cobra coverage. So this special notice must be sent to AEIs no later than May 31st of 2021. The summary of Cobra premium assistance provisions and request for treatment as an assistance eligible individual form are also intended to be provided with this notice. I want to mention, however, this form is not to be used to individuals who were offered state continuation and did not elect, or lapsed their coverage in between when their original election and now. And that's because, as a reminder, there's no second election chance for these people. Fourth, we have the Arpa General Notice and Election Notice. So this notice is intended to be provided to all qualified beneficiaries experiencing a qualifying event between April 1st of 2021 and September 30th of 2021. It incorporates both a description of the subsidy and the contents of a standard election notice. The summary of the Cobra Premium Assistance Provisions and Request for Treatment as an Assistance Eligible Individual form are also intended to be provided with this notice. The fifth notice is the Alternative Notice of Arpa Continuation Coverage Election Notice, and it's a bit of a mouthful. The notice is a model notice designed to be used with individuals that may qualify for the subsidy under a state continuation or mini Cobra law. And finally, we have the sixth notice, the Notice of Expiration of Premium Assistance. This notice must be sent to anyone receiving the premium assistance and informs them of when their subsidy is going to end. This notice must be sent between 15 and 45 days prior to the expiration of the subsidy. So as you can see, we have a whole slew of new notices. We have 6 whole notices, and that's a lot for employers to handle. I want to make sure everyone understands also how this plays into the outbreak period extension rules that were put in place last year. Employees and employers should be aware that the employee may have up to 1 year to elect Cobra, but subsidized coverage must be elected within 60 days of receiving the notice. But I want to reiterate again, the impact that Arpa had on state continuation is minimal. AEIs are only eligible for a subsidy. They have no second election chance. So if they didn't elect state continuation when it was first offered to them, they're not going to be able to hop on now. And now I want to touch on a really common employee question. A lot of employees want to know if they can switch their plan when electing Cobra or continuation coverage under Arpa. While plan switching is allowed, I want to say that this provision is totally optional for the employer. If the employer does choose to allow it, the plan must provide a notice to participants giving them 90 days to change their election. This ability must be extended to similarly situated individuals as well. In addition, if the employer does choose to allow this provision, there are some other specific Cobra requirements that must be followed. The Cobra premium for the plan must be less than or the same as the current premium. In addition, the other plan must have already been in place and must be available to similarly situated employees. And finally, the other coverage that's offered must not be limited to only accepted benefits, a QSARA, or Health FSA. And as a final parting note, I want to address an interesting little fact that employers should keep in mind when it comes to states that have extended continuation beyond the normal federal time period. A really good example here is the New York Cobra rule. In New York, an individual may be eligible for 18 months of federal Cobra as well as an additional 18 months of state continuation. The subsidy would only apply during the original 18-month period, not the additional 18 months of state continuation. And that concludes our update for this week. As always, should you have any questions, please reach out to your dedicated Savoy team and continue to use the resources available on our website at savoyassociates.com. From all of us at Savoy, stay healthy and stay safe. Thank you for joining us today.